This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
Welcome back. Another episode. Today I got with me Steve Rozenberg. He is a full-time airline pilot. He's a vice president of education at Mynd Property Management, and he's a ex-real estate investor. I guess you still invest in real estate, but
yeah, still am. I think it's one of those things you never get rid of, right? You got them. It's like bad luggage. It just stays with you.
Yeah, for sure. He got into real estate originally after kind of the uncertainty of 9/11 and him being in the airline industry. Built up a huge property management company and has done all kinds of things since. So, Steve, my man, thanks for being here. Oh, I wanted to mention this also. He is the author of this amazing book, Building an Empire, Feeling Our Way to Millions. It's a kind of a story of his property management company, building it up, and mistakes he made, and having a good exit strategy and all that. So, Steve, my man, thanks for being here.
No problem, Justin. Appreciate you having me on today.
Yeah, for sure. So why don't we I like to kind of tell the story of how you got into real estate, your business adventures, all that kind of thing. So why don't we go back a few years and kind of dive into how you got started in real estate, your history, about your career and all that sort of thing.
Yeah, sure. So I always tell people I never really wanted to get into real estate at all. It was never part of my life plan of what I wanted to do. I never thought I would be a speaker, speaking on stages and influencing people. As a kid growing up, grew up in Southern California, and all I ever wanted to do my whole life was fly airplanes. And, you look up in the sky and you see a plane, and I used to think, man, how do people do that? I'd love to do that for a job. And didn't know anyone in the airline industry. And so I did a lot of studying, did a lot of learning, learned how to fly on my own, and ended up being very aggressive at the taking of the lessons and all that stuff. Played sports as a kid. So I kind of took that same mentality towards flying as I did playing sports. And
sure.
that proved to help me down the road, which I'll explain. But what I ended up doing was at 25 years old, I got hired with a major airline, international airline, which is about 10 years sooner than the average. The average age was 35. I was 25. I'm not much smarter than any other people. I don't know anyone. I think I happened to be in the right place at the right time in the industry, because it goes in cycles of hiring and furloughs. And I was very persistent in what I did. I was relentless in trying to get a job with an airline after I had my hours.
Sure.
So I ended up getting a job with them and was out in Guam, flying out in the South Pacific, all over the islands and Asia and Australia and stuff like that. And in August of 2001, my wife and I decided that we were going to leave Guam and come back to the States. And what happened was there are the only base, they didn't have any bases in California at the time. The only headquarters was in Houston, Texas. So we said, okay, well, we don't own any property in California. Let's just go to Houston. So we moved to Houston. Our stuff is on the boat. It takes about 6-8 weeks to get there. So our stuff is on the ship. We're staying in like a move-in condo, furnished type thing. And 9/11 hits. Up until this point, I had thought, and my feelings and every other airline pilot that you talk to was, I had the most safe, secure job you could ever ask for. I was in a union. I was doing what I loved doing. I was at the pinnacle of my career at 26, 27 years old, whatever I was. And I was living the dream. And I remember telling my wife at some time when we were in Guam, I'd scuba dive and fish and all that stuff. And I'm thinking, why would anyone ever do anything else? You see these guys having these part-time jobs and creating businesses. I'm thinking, why would you do that? This is we're here. We made it to where you want to go.
Yeah.
Well, September 10th, I did have the most safe, secure job. And obviously the disasters hit on September 11th. And on September 13th was kind of my 9/11 day, which I talk about in the book, because that was the day that I realized that the safe and secure job that I thought that I had was actually the most unsafe, unsecure, because that was the day I was given a furlough notice saying, hey, we need to protect the shareholders. We don't know what's going to happen, but we need to protect stocks. So basically you are on the furlough list, and you possibly are going to be on the street with another 50,000 other airline pilots. And we're going to start abrogating contracts, slashing pensions. We're going to do whatever it takes to keep the solvency of the company alive, which is, in reality, that's their job as board members.
Sure.
But for me, you know, when you go to thinking that you've got this safe, secure job and you're set for life. Now, the reason I say this is it was such a punch in the face, I guess you could say, was because normally when you see an industry changing, like the oil industry or .com, you can see trends that are happening that are going to get you, and you go, you know what, I may be losing a job in the next 6 months.
Yeah.
This was 72 hours of me saying, I've got the best career in the world to, what am I going to do? And what happened after that was I started realizing that as I was looking for jobs, I really was unqualified to do anything else because I was so specialized in flying this metal tube around in the sky with a couple hundred people in the back. I couldn't drive a truck. I wasn't certified in computers. I mean, I had no other qualifications for any other job. And you're thinking, wait a second, I've spent thousands of dollars training. I mean, I'm a proficient, I know I can do things. It's like, yeah, but you have no expertise. You have no skill.
Yeah.
And that was when it realized, like, wow, like this whole illusion of having a career and safe and security is really just that. It's an illusion. And it's my fault. It's my fault for expecting it, assuming it, whatever you want to call it. I didn't do anything in 9/11. I wasn't a part of it, but I was reaping the repercussions of it, basically.
No, that all makes sense. And, you know, that's funny because kind of the same thing has happened here with the company that I'm currently working for. You know, I work for a big utility in California, and they've had to go through bankruptcy because of all the fires in California and all this thing. And I just feel so bad for these guys that wanted to retire in the last, you know, year. If they were planning on retiring, it's like the stock went from $65 a share down to $6 a share, and their 401ks are slashed. They have no backup plan and all these things. And, you know, luckily the pensions and stuff are still there for now, but who knows what's going to happen in bankruptcy. So that's totally a good point. If you love your job, stick with your job, but you got to have like a backup plan because you never know what's going to happen.
That's so true. And, you know, that speaking of that, you know, not at my company, but at other airlines, there were people that were getting their retirement on an annuity payment. So they were getting payouts every month on their retirement. Well, let's say they were getting X dollars, and these guys are, you know, 60, 70, 80 years old, been retired for many years. And all of a sudden they said, yeah, you're not getting X. Now you're getting this. And this is what you're getting. And this is just how it is. So there are guys that are 75 years old that were getting, you know, maybe $5,000 a month in retirement. And now they're getting the PBGC, which is the government-backed pension, and they're getting $1,000 a month. Gosh. And they go, wait a second, like that was my pension that I agreed on. It's like, yeah, but we had to abrogate that because we need the solvency of the company and we're doing what's best.
Yeah.
So that was my point. So I realized, now luckily I never got furloughed. I actually came to 30 from the bottom of a 6,000 pilot seniority list. I mean, I was my butt was scraping the bottom floor, if you will, of that. And any hiccup, catastrophe, anything, I would have been pushed out the bottom. And so it just made me realize really how vulnerable I was in this career. Now, what I started doing is I said, okay, you know, you have this, you go through those, I think it's the 7 cycles of when drama hits. And, you know, first you're blaming, then you're excuse, denial, all these things. And all of a sudden I'm like, okay, you know what? At the end of the day, it's on me, and I need to figure out a solution. And the one thing I've learned from being an airline pilot is when everything goes wrong and all the disasters hit and emergencies happen, it's still on you to find the solution and get working towards the goal of the solution. Like, you can dwell in the problem, right? But someone's got to fly the plane and figure out a solution to fix this thing because it's only you and another guy up there, right? So sure. I kind of talked, I'm like, okay, what is the solution? I started reading as much as I could about people that were wealthy. And I thought, okay, you know, maybe I could start there. I didn't know anything about this. Like, it never even was in my screen of looking at this kind of stuff. And so what I ended up doing was the internet wasn't around. It's 2001. I mean, it was there, but it wasn't, you know, like it is today. There was no YouTube. So I did what I thought I knew how to do. I got a library card, and I went to the library, and I would go there all the time, and I would read a book a week on anything I could on creating wealth. And what I realized was very interesting was that the common thread between almost all the people I read about at some point was tied to real estate. And I thought, okay, makes sense. I knew a lot of pilots that owned properties, rentals, and they would do that off because it's not a full-time job, or so I thought. You know, it's not full-time. It's something I can do passively, so I thought. And I can do this on the side, so I thought. And so I thought, okay, this makes sense. Let me learn more about this. So I started doing a deep vertical dive very, very focused into learning real estate. And that's when I was reading a book a week, just entrenching myself, because imagine now I'm 29, 30 years old.
Mm-hmm.
And anyone watching this can understand when you're very competitive in what you do and you enter a race, and let's say it's a 4-lap race and you enter at lap 3, you're like going, what am I doing? Like I'm losing. I've got to win. And so for me, I felt like I was losing in this new society that I kind of walked into with all these cash on cash words and ROI. And there was all these meetings going on, and there was real estate investment clubs. And I was thinking, like, I don't know anything about this. Like, I am starting at below 0. I've got to get to level 10 as fast as I can. And so that's when I just made it my mission to learn as much as possible. And again, that was the book a week. I talked to anyone I could talk to, and I ended up getting into doing wholesaling and doing with option contracts and stuff like that. I don't believe it was called that back then. I'm not sure. It's pretty new, at least in that industry, it seemed like it. And so I started learning about that and double closes and flipping. And I got really, really good because I started learning and focusing on how to negotiate. And I understood the fundamentals of speaking and negotiating and emotional drives. And it was very interesting to me. And I got very good at it. I got so good at it that I made enough money after about 2 years that I was able to buy into a partnership of an apartment complex.
Okay.
So, and that was the grass is greener, because that was the strategy to propel me into the real estate buy and hold world.
Yeah. Was this all in the Houston area?
It's all in Houston, yeah.
And then, so real quick before we move on to that next part, how was that transition, from starting to learn about it until you started actually doing wholesale deals? And then what is, the option contract and kind of the type of deals that you were doing, if you could just elaborate on that a little bit.
What was interesting is it's one of those things when you don't know anything and you're just doing it, and that's what I was doing. Because I really knew nothing about real estate, and I paid a guy like $10,000 to show me how to do this. And people were like, well, you're crazy. And I'm thinking, well, maybe I am, but I'm going down this path, and whatever this guy says, I'm going to do. Yeah. Right. And because I didn't know enough about real estate, I was doing what I was told, and it worked. Mm-hmm. And what was funny is after I'd been doing it for about 6 months or a year, people were like, how are you doing that? And I told them. And so an option contract, and I'm not a lawyer and I'm not getting legal advice, but an option contract is a unilateral agreement, meaning I have the option to buy it, but I do not have the obligation to buy it. So I can buy it, or I can say I'm going to pass. So basically what you do with an option contract is you find a motivated seller, you put an option on it for 30 to 45 days. And during that time, I would find a buyer, and I had equitable interest in the property. I would give him some money on it. And basically, once that was done, then the buyer would buy it from him. The buyer would buy it from the seller, and then I would make the spread in between, essentially, is how it worked. At closing, I would get paid out at closing. We do it at a title company. And I did exactly what I was told. And of course, laws have changed and all that stuff now. So you want to make sure whatever city you're in, make sure it's the right way.
But it's pretty much the same thing as wholesaling any property now. I mean, you find a motivated seller that wants to sell their property. You say, okay, I'll buy it for $100,000, and then you go find a buyer that's willing to pay $120 for it, and then you make the spread.
Exactly. So. And I was doing really well. I was doing about $20,000 a deal, and these properties are $150,000 to $100,000, so there wasn't a lot. But I learned how to negotiate, and I was doing. And people were like, "How are you making all this money?" And I told them what I did. And everyone would tell me, you can't do that. And I'm like, I just did it like 10 times. Like, I don't understand what you're telling me. Like, because I didn't know, like, I didn't have that negative people around me telling me that'll never be done. I was just doing it.
Which is kind of a benefit. Yeah. Which is kind of a benefit of like that time frame, because now so many people, you had to like go to the library, even though there was the internet, but you had to go to the library and like focus, and you weren't around tons of people. Whereas now people are like on podcasts and social media and all this stuff. And so they get the negative feedback in their head just as much as they get the positive. They're like, oh no, I don't know what to do, but kind of get that out of there and just focus on the positive, Yeah.
And that was the thing. I was like, because it's one of those things. If no one tells you can't do it, you don't know you can't do it. When people start telling you can't do it, what they're really saying is what I've learned, down the road is they're saying they can't do it, or maybe they don't know how to do it, or they'd rather not see you make $20,000 a deal. They'd rather see you be a loser like them. And, they'd rather, misery likes company, right? And I was like, I don't know what you're saying. Like, I didn't even understand. I was like, I don't know what you're saying. Like, I am doing this right now. Well, that's impossible. You'll never find a buyer at that price point and make $20,000. I'm like, here's the checks. Like, I'm not lying. I'm just, I wasn't saying it to be proud. I'm like, it is working. And what was interesting is when I joined a local investing club, and they focused more on apartment buildings here in Houston. And that's when I met my business partner, who we are still partners today to the time we sold our business 15 years later. And we went into partnerships on an apartment complex. And what was interesting is I always call it the grass is greener theory, that he wanted to know what I was doing, and he wanted to learn the negotiation skills and all the wholesaling and options. I wanted to learn how to run real estate and run an apartment complex. So basically, we agreed that I would show him how to do it, and he would basically get free day labor of me to teach me how to run an apartment complex. And so I was showing him how to do it. Of course, when he and I were doing it, we would split the deals 50-50. When we had the apartment, I was just working. Like, I was just learning the intricacies. And I'm like, now I think I know why you don't like doing this. It's great to say you own an apartment complex and you're getting some cash flow, but I'm making like 4 times the amount on the wholesaling and flipping. However, the one difference that I tell people is that was a job. When you're wholesaling and flipping, if you stop working, so does the money.
Yeah.
And that's what I got tired of doing. I got tired of every time I sold a deal or flipped or this or that, I would have to start over again. And of course, I'm still flying full time. And so I really started getting tired of it. And the other thing I've noticed was all the investors that were buying the deals for me, they knew how much I was making. Like, I told everybody, this is how much I'm making on the deal. If you don't like it, then don't do business with me. Like, I want you to be okay. And I told the sellers too, this is what I'm making. Like, if you don't like it, then use me as plan B 6 months from now if you can't sell it. And that was the one thing that people liked, is they're like, you're not hiding anything. I'm like, no, I'm just doing it. So what I noticed though is that the investors that were buying them were fine with it because they were going to be making the long-term gain. I was making short money. They were making long money. And I really started thinking about that. And so we sold the apartment complex. And what happened is Pete and I, we started buying some single family homes with the money that we made from the apartment complex. Made probably every mistake in the book you can imagine. It's in my book of how to buy the wrong properties with no strategy in bad areas and no model, you name it, and we did it. And not only did it once, we did it about 30 something times. So much to the point that my wife said, if you buy another one of these crappy homes, it better be nice because you will be living in it. So that's when I realized I had a problem of buying bad properties, because we were buying these low-income properties. And just real quick, the quick story behind that is we were buying properties with the wrong strategy. We thought that we could buy properties, get the cash flow, fix them up based on cash flow, and tenants would stay forever, and we'd go happily ever after. That's not the reality of that type of property and that type of clientele.
Mm-hmm. Yeah, for sure. Because that type of clientele, right? They're more transient, like their lives are kind of like up in the air, and so they don't know. And
I tell people, like, it's not that they were bad properties. They were bad properties for us based on the strategy we were trying to do. And so that was what I tell people. I'm like, they're good deals. The people we sold them to, a lot of them made great money with those properties. The way we were running them was the wrong way. And that was a very valuable lesson to me.
Right. Okay. Well, and that's probably where you lead to your property management company that got to be so successful. But I'll take a step back real quick, because you guys got into, I think it was a 39 unit apartment building.
Yeah.
So then you end up selling it, and then you went back to single family. So kind of real quick, like, tell us, why did you not continue in multifamily, or did something drastic go wrong with that apartment building?
Nothing went drastic with that apartment building. I think that everybody has their own beliefs on what is the best strategy. Everybody always thinks bigger is better, right? Everybody thinks I'm going from here and I'm going to escalate from elementary school to high school, right? That is true. However, what a lot of people don't realize with apartment complexes is, yes, the ability to make a lot more money is there. You can add zeros on the profit side, but you also have to add zeros on the expenses side, and you have to have the ability to add those zeros on both sides of the equation. And nobody ever talks about what happens when things go wrong in apartment complexes, or when there's a $30,000 cash call because the roof needs to be redone or the boiler heater goes out and you need it, and the partners aren't getting along. There's like everything, right? Nothing's all roses, right? And there's a lot of drama that goes on in owning an apartment complex. And when you buy an apartment complex, just to start with, you're dealing with a sophisticated investor. Now, I'm not talking for all states, but I can tell you in Texas, not everything has to be disclosed when you buy a multifamily. It's not like a single family property.
Mm-hmm.
And it's basically buyer beware. It's up to you. Well, my business partner was in another apartment complex, 100 unit, that he was a passive investor on, that about 30 or 60 days after they owned it, they bought it for, I think it was, I'll throw some numbers, it was like 1.7 million. They were going to do a value add, increase the NOI, and they were going to sell it for about 2.7 million, make $1 million in about 4 years and exit. That was the exit strategy. Well, about 60 days in, one of the balconies collapses and falls.
Oh, no.
All of a sudden, the city of Pasadena, which is out here in Houston, gets involved and says, whoa, this place is unsafe. You need to notify all of your residents that this is an unsafe apartment complex, right? And we want to start doing some tests. So we want to test the gas line. So they run a test on the gas line, the city of Houston does, and they blow the gas line in the middle of winter. Now there's no heat. So their vacancy rate went from like 9% to like 75% vacant.
Oh my gosh.
In a matter of like 3 months. So my business partner, he's a passive investor in this. He just put money in. He was not operating it.
Mm-hmm.
Long story short, it gets foreclosed on. The bank comes after them for 1.7 million, right? And even though they ended up selling it, there was a clause in the contract that said no matter what, they can come back and for repercussions. There was 4 partners in the deal. 2 of them filed bankruptcy. That left my business partner and another person that I knew having to fight it off. He had to sell almost all of his real estate just for the legal fees and to pay off, I think it was like $50,000 they settled on. But for about 2 years, went to the turmoil of this bank coming after him.
Yeah.
That's the dark side people don't talk about. And then, so my point is unless you have the money and the expertise to owning an apartment complex, you need to be very careful in that world, because when it bites you, it's not like a $5,000 roof fight. Mm-hmm. It could be a $100,000 problem. And if you don't have the liquidity to back it up and you don't have the knowledge to back it up, you may be playing in a sandbox that will eat you alive. And so going to that, I'm not opposed to apartment complexes. I'm in some transactions and some deals where people are in them. I just don't want to be involved in running them and being the acquisitions person on them. And whoever is in them, I want to make sure these people have tried and true and they know what they're doing and they've had that dark side happen to them, because it's not when things go good. Right now, everyone's doing these syndications and everyone's doing good and it's rosy. With every action, there's a reaction, right? And it's the law of nature. And there will be a recorrection, and the ones that bought correctly and knew what they were doing will be fine. The ones that didn't will financially and emotionally, they'll pay for it. And so that's kind of I'm not trying to be a doomsdayer. I'm not trying to say they don't work. The thing about apartments is it's a different business model, a much different business model than a single family property. Yeah. And so we took it upon us to say, you know what, we really don't have the pockets. To us, it didn't financially make sense unless we bought 100 units or more. So at the time, it was like $40,000 a unit. So you're looking at about $4 million, 25% down. You're looking about, so you do the math on it. All of a sudden you're going, man, this is a lot of money. And we got to have the extra liquidity to be able to have the expenses for the what if. And we said, man, we would be stretching ourselves pretty thin if there was a hiccup. And I don't want to do that. So we thought the safest bet, which actually was not that safe, but the safest bet was buy single family.
Okay, cool. Yeah, no, that those are all perfect, valid points, because when, like you said, when everything's going great, everything's rosy, like right now in America, the economy's great, everything's chugging along, people are buying deals, the cap rates are compressing, their spreads are lower and lower. They're buying older home or apartment complexes and stuff that are, late 60s, 70s, early 80s. Man, that's 30, 40, 50 years of issues that could be popping up. So just as long as you're like focused, like you said, and you're really an expert in that form of real estate, it's perfectly fine. But if you're not 100% committed to it, then maybe focus on something else. So
it reminds me of the stock market days. I don't know if you remember when the boom happened in 2000, when you get into a taxi and the cab driver is giving you stock advice. Yeah. When I see people that are in real estate for 2 years and they're starting syndications, that reminds me of that time frame. And I'm thinking, do you know anything about real estate? Well, I own a house and it makes sense financially. And I'm thinking, but do you know anything about the operation? I'm not saying you have to. You can hire people to do that, but it just reminds me of that time, right? That trend. And it scares me that the trend, like anything, it swings and it's going to swing back. I mean, that's just the law of nature. Everyone gets shocked when it does, but we all know it's going to happen. There's always corrections and recorrections. That's just the way the market works.
Yeah, for sure. Cool. No, that's good, valid point. So you guys end up going to single family, you buy like 30 something properties, you're buying the wrong properties. It's probably making some money, but it's just like you guys aren't fully committed. And then that leads to the next step, which is what, your property management company they end up building out?
Yeah. So basically we got to a point, I talk about it in my book, we got to a point of like that we hit the bottom, like we hit the rock bottom of our lives, of our finances, where we were trying to trash out properties on our own to save a couple $100. And finally we said, like, basically we realized we are the problem. Like, this is us. And we need to either sell them, hand them over to a management company, or figure this out ourselves. Well, we couldn't sell them because this was about 2009, 2010, where no one could get a loan. No management company would take them. We tried to hand them over to a management company, and they were like, these properties will never make you money. These are problem properties. They're too time consuming. We won't manage them. So we were stuck. So basically we said, okay, you know what? Obviously we're not the smartest guys in the world, but we're not the dumbest. So we took my knowledge of being an airline pilot. He was running IT departments for some companies. And we said, let's make this infrastructure of how we would want a company to run if we hired that company. And at first it was just self-preservation. Mm-hmm. And what happened is once we did that, after about 6-9 months, we set rules, we set policies, we set procedures, and we stuck to them. And what we realized is as we started running this more as a business, things started to stabilize because we weren't running emotions. And what happened is people started approaching us and asking us, hey, could you manage our properties? And we were like, no effing way do we want your problems. Like, we barely fixed ours. Are you kidding me?
Yeah.
But then what we realized is our systems were working for multiple people because we tell them what to do and they would come back and be like, man, that worked. So what we did first is we went to a business coach. And we explained to the business coach what happened to us and where we thought we could go. And we said, basically, do we have a business here? Is there something here? And he basically said, yes, you have a business. Whether you two morons figure it out is anyone's guess. But with the right guidance, you can create a very successful business out of this. So he was a great closer because he closed us and we hired him on the spot. And he had been with us for 7 years. This guy, we went to him every week for 7 years, getting coached by this guy before we even had our first client, essentially. And
can you talk about that real quick? Because a lot of people, are shy, or, they're not sure about hiring a business coach or a real estate or a mentor or something like that. What led you to the path of hiring a business coach? Like, how did you come to that conclusion?
Well, I think our path was, we already knew that we were not smart enough to run a business. Like, we saw what we did. Mm-hmm. And we realized that any of these businesses that people do, there's a business, there's a fundamental infrastructure that goes into the business that we did not know. I'm an airline pilot. He was running an IT department for a large company. We didn't know accounting. We didn't know client acquisition costs. We didn't know marketing strategies. We had no idea. So this was a new realm for us. So it's like, okay, why would we go into a business, whether it's owning a piece of real estate, which is a business, or starting a management company, and expect a different outcome based on the same knowledge that we had 2 years ago that got us into this mess?
Yeah.
And now you're playing with other people's property. So I would tell anybody without a doubt in my mind that if we did not have a business coach, we probably would not have made it past our first year, let alone grow this thing to exponential size and end up selling the company. No way. And along the way, the business coach that we had, which is a national franchise, the business coach that we had, every time we grew, there's more problems. Like, you never get out of the challenges. And so every time we had challenges, he was there to walk us through and really ask us questions on how we could solve these problems. And he never really did anything for us. He made us do it. And because of that, we became I would say very good business owners, because we understood how to run a business like a business, not as an operator.
Yeah.
And that was the biggest. People ask me, like, what was the difference? I said, when you talked about property management companies, so, I'll tell you, in the course of 7 years of us owning Empire Industries, we took it to over 1,000 properties. We scaled to 3 cities. I was speaking all over the country as well as Australia about how we were running companies and a lot of business fundamentals. And what I tell people is the difference between us and other management companies is a lot of people identify themselves as an operator, as a property manager, as whatever it is that you do. We are business owners. The business that we own happens to be property management. So we look at the infrastructure. So when someone says to me, "Hey, can you help me? Can you help me with your business?" I can look at their business and say, "There's your problem right there. You don't have any inbound marketing, or your acquisition cost is too high," because of all the coaching I've had. And without that, there's no way I would know what I know, without a doubt.
Yeah, that's so smart. And that's like Jocko Willink's book, Extreme Ownership, which is what you keep proving over and over again, is like you get into something, you say, "I don't really know what I'm doing. I want to learn." And then you look for like some way to do it instead of just thinking, "Oh, I can do it. I'll figure it out. I can do it." Well, like hiring a mentor or a coach or something just takes you, you still got to go through the line at Disneyland, but it just like makes you get to the front of the line quicker. So,
yeah, absolutely. And
awesome.
I'm a huge believer. I still get mentored. I still get coached. I still voraciously listen to audiobooks. I buy courses. I mean, the day you stop learning is the day you start shrinking. You never stay the same, right? You either grow or you die.
Yeah.
And, I talk a lot about that on like my social channels and stuff. It's like, look, you never stay the same. You've got to, if you want to get to where you want to go, you've got to do something different than got you to here. I mean, it's simple, but it's so simple we don't do it. And I get that, it's easier said than done because everyone has life and drama going on. But the reality is you've got to make, if it's going to be a priority, you have to go all in and make it that focus. And for us, our priority was growing our business to the best that we could be. And that's what we did.
Okay, so you guys hire the business coach and you're like, "Okay, we're going to make this a business," and you start growing rapidly. Can you kind of dive into like some of the systems? You said you brought kind of like your Airline Pilot, which I'm sure, I don't know everything about flying, hardly anything, but I know there's tons of checklists, like systems and processes in place to make sure everything goes perfectly smooth. And then your partner, he was an IT guy, so obviously he had like the technology side and the organizational skills from that industry. How did you guys like bring that together to make a successful company?
That's a great question. Yeah. So one of the things we did in growing our business is, we were always asked by our business coach and by the person who founded the whole coaching franchise, who we actually ended up being a partner with down the road, downstream with our company. He would always ask us, "What's the sale date of your company?" And this is like a year in, right? We're like,
"Yeah,
what do you mean? Like sell? Like, what are you talking about?" He's like, "What date are you selling your company?" And I'm like, "I don't even know what you're saying. Like, I don't even, it's not even registering in my head."
Yeah.
He's like, "The definition of a business is a commercial profitable enterprise that runs without you and has a sale date attached to it. Meaning you don't have to be the one to sell your company. You don't have to sell it, but it has to be packaged up and running completely on its own if you want to call it a business. And if it's not, you have to call it a job. So are you creating a business or are you creating a job? There's a difference."
Yeah.
And so, of course, that's pretty deep, right? And once you have a date, a deadline, now you're working towards that deadline, right? Now you're going, "Oh shit, okay, now I gotta put a date on this." And so what we did, because of that, we started really understanding the dynamics of how businesses work and how we have to basically have organization charts, roles and duties. There's a great book out there, if anybody is in a business relationship, called the Rocket Fuel.
Oh yeah.
And Rocket Fuel talks about the visionary and the integrator. The visionary is the one who's out there doing what they're doing, bringing people in. The integrator is figuring out how to make it all fit. So in this role, in this company, as we just happened to be, I was the visionary and Pete was the integrator. I would bring him in and he would figure out how to make it work. And so we were very good at staying in our lanes. I respected him, he respected me. I mean, sometimes we'd argue like brothers, but we always respected our positions and we always did what was best for the company, not what was best for us. And we always made sure that all the employees were paid first. We made sure everything was taken care of because that's the right thing to do. We made sure contractors were paid. And we always made sure that we stayed in our own lanes. And for anyone doing business, that was one of the things that at first, everyone's trying to do things, right? And you start stepping on toes and ego gets involved. And when you realize, what am I good at and what do I suck at? And the things that I suck at, who else can do that? And so we started learning that with our business, and as we grew and scaled, we started hiring employees. And then we started scaling more. And the challenge we've learned with any business is that the problems you have at, let's say, 50 properties being managed is totally different than the problems we're going to have at 100 and 500 and 800 and 1,000. Different sets of choke points, different sets of problems. But if you use the foundation of a business model, which is accounting, finances, operation, sales, marketing, 5 things, if you use those 5 things, you can see where the challenges are and flow it out and chart it. So what we did is we would flow chart out our business. We would create checklists based on tasks that have to be done, because property management is all about processes and procedures. We don't sell a gadget. We don't sell TVs, right? We sell a service, and that service is tied to owners, residents, contractors, and everyone in between. And our job is to make everyone happy, right? Everybody has a different definition of happiness. Yeah. So the only thing we could do is run it by the contract, run it by the law, and do our best to provide service. And so it was really tough. I mean, because it's not just you have one client. When you have a property that you're managing, you have 2 clients. You have the owner and you have the resident. And you have to make both of them happy, because we could be the best client to the owner, but lose all of his residents. And he's going to go, you guys are great, but you suck at managing my property because I'm not making any money.
Yeah.
Vice versa, right? So it's a very interesting position, but it's very necessary. The management company in real estate is vital to making this whole thing work, in my opinion. That's another topic, but I think that the way that we were able to grow and scale was we understood leverage, and I'm a big believer in right person, right seat, and getting the right people to do the right roles and tasks. And as we grew, we started doing a lot of outsourcing, and we started using a lot of virtual assistants to do tasks that maybe were not the best suited for the on-site staff. And so we grew a lot of staff members down in Mexico, virtual assistants. We got very, very good at finding them, disc profiling them, and we had a great operation running because of that. And it was just, we understood scale, because I would say, I don't want someone I'm paying, let's just say $25 an hour to do a $5 an hour job. That's not the best use of their time. Let's segment out. And the only way we could do that is by flow charting and putting process and procedures down to identify who does what when in a procedure. And the checklist, just like in the flying, the checklist verifies that it's done. I don't care who does it, but if you check it off, it better be done.
Yeah.
And so that's how you can systematize your business.
Well, and it sounds like a lot, and you're dropping a lot of knowledge here, but for everybody listening, it's not that when you guys got started, again, you didn't know any of this, right?
We know nothing.
You knew nothing. So you learned this over 15 years of building a company and being
seven years of the company.
7 years of the company, and getting up to 1,000 units or whatever it was. But it was a gradual progression. Each step of the way, you learned more and more and put more and more processes in place. I think I've heard you talk about like KPIs, key performance indicators. There's a good book, The 4 Disciplines of Execution, I've read, and I need to get more into it. But can you kind of touch on that? What are KPIs? Why is it important to business, and how it can apply to not just property management, but running your own rental properties or apartments or anything?
So the easy way to explain KPIs, so KPIs are called key performance indicators, and those are basically metrics. So if you think about it, when you have children and your children are in school, they get a report card. Mm-hmm. And you can look at that report card and you can see how your child is doing in school, right? You can get a pretty good gauge.
Yeah.
That's basically KPIs for a student. When you go to any kind of game, I put up a scoreboard, and I do this when I'm speaking about KPIs when I'm presenting on stage, and I throw up a scoreboard. And from looking at a scoreboard, you can tell who's winning, who's losing, who's about to foul out, how much longer is in the game, and where we're at in the game and what quarter and all that stuff. I don't even know what the sport is, but I can get a pretty good idea of what's going on in that game based on that scorecard. Metrics and KPIs are the same thing. It's your scoreboard of your business. So I can look at your scoreboard, which is your KPIs, things that are important, and I can go, man, you are killing it, or you are sucking right here and you're going to lose the game.
Yeah.
And the challenge we have is, and again, that's why it's so important to keep learning and keep educating yourself, because we feel that once we graduate high school, college, whatever it is, and we go into business, that we're not accountable to anybody. When we own a rental property, it's only one rental property. I shouldn't be accountable to anybody. And I think that is completely 100% wrong. You are accountable. You are accountable to yourself, your family, your bank, your board of directors. If you don't have one, get one. But that is how you hold yourself accountable. Because I tell people, I go, how do I know that you're doing what you should be doing today? Well, I don't. Well, I should, because if not, you got to understand, when you own a rental property, you're running a business, right? That business has accountability. You are the CEO of that business. If you are not doing what needs to be done, then you need to be fired. And that's the bottom line. And the only way I can tell is by your KPIs and your metrics. So what you normally do is KPIs, the way we've done them in the past is we had them for every department, but it's things that are basically want to be measured, things that are maybe on fire in your business that you go, I need to track this. So if, for example, you have a business and your phone is not ringing, you don't have a sales problem, you have a marketing problem. But if I just looked and said, man, Justin, you don't have any money in your bank account, like, you're messed up. That's not telling me where the problem is. If I say, okay, how many times does your phone ring a day? And you say the phone rings 25 times a day. Say, okay, how many times do you answer the phone? I answer the phone 3 times. Okay, I can see where your problem is right there. You're not answering your phone. So you don't have a marketing problem, you have a sales problem, right? Then we go a little bit further and we go, okay, well, it's not 20, it's 25, but I answer it 20 times. Okay, how many of those people become clients? 1. Okay, what's the average? What's the industry average? Industry average is I should have 19. Okay, then your sales script is your problem. You need to work better on your sales script. But if I don't see where these metrics are in your business, I can't help you, right? And so you should be able to look at these things in your business and be like, okay, what are we doing? Where are we going? And whether it's 1 rental or 50 rentals, you've got to start somewhere, right? It's like the basics of foundation, working out, anything you look at. You know, you want to track how much you're losing weight, you write it down. You want to see where your money's going, you create a ledger. You want to see how your business is doing, create KPIs. You'll very clearly see where the problems are if you write down the metrics. And again, you don't need 15 or 20. You probably need 5 to 7, and that's it.
Yeah.
And,
So go ahead.
No, that's it. That's the. I don't know if that explained it, but that's KPIs.
Yeah, KPIs. Yeah, and so there's lead and lag measures in there too that it kind of gets complicated, but you can like read a book or look it up online. But pretty much what it is like looking at, like you said earlier, having an end goal. If it's a business, you have your selling point, your selling date, and what you want to sell for, and then you need to work the steps backwards into what's going to get me to that goal, and then you look at each one of those steps along the way and figure out, okay, if I need to make $1 million a year, I need to make so much a month. That means I have to have so many clients coming in. That means I need to convert so many leads to this and that, right? It's just like a basic steps and processes working back.
It is. Yeah, I mean, you can make it as elaborate as you want with charts and graphs and all this other stuff, or you can go like, you know what? Like, I'll give you an example. I was helping this young lady yesterday in Phoenix, Arizona. She's a friend of mine. She wants some help, so I'm helping her out, and she wants to transition from one type of business model to the other, as far as raising prices, but a little nervous to raise prices. So I was like, okay, well, here's what we're gonna do. Like, we have to come up with a strategy. In 6 months, you're no longer gonna have these clients. So we have to do things every day, small mini steps every day, to make sure that on month 6 we can flip the switch.
Mm-hmm.
And it's not like month 5.5 we go, okay, now I'm going to work on it. No. This has to be focused and intentional every day. How do I know that she is doing what she's supposed to be doing without me having to ask her? Through KPI. So when you own a company and you have employees, and we had employees here in the US, we had them in Mexico, we had them in Asia. How do we know they're doing their job? KPIs, right? I can look at the KPIs. The data is going to tell me whether or not my system, is something wrong. It tells me if there's a problem. Now, if there's a problem, I can drill down deeper and be like, why are we not getting as many inbounds? Is it a marketing strategy? Is it a marketing person? Is it a system problem, a process problem, or a person problem? That's what you got to ask yourself.
Mm-hmm.
But you can't ask yourself that unless you're looking at the data. And so that's what it tells you. And again, like I said, you can make it as in-depth as you want, but it's really an accountability. And for me, and again, for people that have staff members or they don't, when I have these KPIs, like with team, if they're not hitting their numbers, part of a weekly meeting that I have with them, when they bring me the KPIs and we discuss it, is an executive summary of telling me these are down, but here's why, and here's what I'm doing to fix it. Right? Because me screaming and yelling isn't going to make it. I'm not going to make a KPI. See, we do conditional KPIs where if they're hitting their number, they're green. And if they're not hitting the number, they're red. So there's no interpretation. It's either yes or no. There's no, well, we're doing this. If you have to explain it, I've learned it's a no.
Yeah.
It's either yes or no, right? So it's either red or green. There's no interpretation. If it's red, look, I just want to know, what are we doing to fix it? Did we set wrong parameters? Is it cyclical in the industry that maybe this time of year doesn't let's put some knowledge behind it and work together I want them all green. What do we have to do to make them green? And it's, again, you're getting them to think, because the whole key in having a business is having your staff and team leveraged out that they're doing it and not you. And if they always come to me for the solution, I'm training them to come to me, right? And then I will be the choke point of our growth, because I will hit a glass ceiling. And you had asked it earlier, one of your questions was why did we get a business coach? We knew that we were eventually at some point going to be the glass ceiling and the choke point in our business. And so that's not what we wanted. So if you always make yourself the hero and you put on your cape and you run down and you fix all the problems for everyone, they know, well, why should I fix it? He's just going to come fix it himself. So I'll just wait for Justin to take care of it, because, like at the gym, right? You said you own parts of the gym. If always you're going down there and fixing things at the gym, what are you doing? You're training the team that Justin will come fix it. Why do I have to do it? He's just going to say I did it wrong anyways. But if you have them do it and they come to you with the solution, now you're training them to do it. So that's just the mindset. That's why KPIs, that's how to effectively use KPIs, in my opinion.
No, it totally makes sense. And you mentioned earlier about your friend in Arizona. You said, listen, if it's in 6 months, your goal date, you have to do steps every day. I think a lot of people, including myself, and I'm sure you've had times in your life where you have these goals probably, but you kind of you're like, you don't really know what to do. So you don't take any action. And before you know it, a day goes by, a week goes by, a month goes by. And all of a sudden you're like, shoot, that goal date is coming up sooner than later. And before we know it, 10 years might go by and you're not making progress. So every day you need to be doing something towards.
So not to give them a big plug, but I've got this is the Bigger Pockets intention journal. So I'm good. I do a lot of stuff with Bigger Pockets. And I got this from, Brandon Turner wrote it. And I gotta say, man, and I'm not to give them a plug. I mean, I love them. They do a great job.
Plug them away. They're awesome.
Oh yeah. Bigger Pockets. I tell you what, if your listeners are not on there, and if they're not watching my videos, they should, but the thing about Bigger Pockets is that they're so strong in culture and education, which is why I love them. And I'm personal friends with Brandon, and he sent me this book, and so I started using it. And I am a big believer in, I write my calendar, I write the stuff down I have to do every day. I got notes everywhere. I'm a big believer into that, right? And so one of the things I've learned about this intention journal is I said, I'm going to read the directions, because normally I just I know how to do it. I'm not doing that. That's stupid. I'm not writing this. That's stupid. Yeah. But I'm like, you know what? I'm going to intentionally do what the book says. I'm going to read the directions, which I never do. And then I'm going to actually do what he says to do every day. And one of the things he says, which is very, very astute on your part, is goals work. Let's say you have a year goal, right? Let's say I got this January 1, but this is only a 90-day journal, right? This is not a 1-year journal. So you have to ask yourself, why is it 90-day journal? Well, your brain works in 90-day cycles. That's how your brain works best. That's why there's 4 quarters in the year. That's why things are cyclical and they're quarterly. That's how your brain works best. If you try to do a goal past that, statistically, it's not going to work. So you can set a 1-year goal, but it's broken down into 90-day increments of how you're going to get there. So this journal basically says, okay, Steve, what are your 90-day goals? What do you want in 90 days? I want this, maybe some personal goal, but you only get to pick 3. Okay, what are the 3 that are going to keep me going towards my 1-year goal? Because they're all stacked up, right? It's like Legos.
Yeah.
Well, what you have to do every week is you have to write down what your goals are, right? Why that goal is important to you, and what you're going to do this week to achieve that goal, right? So that's every Sunday, you got to write that down. So every Sunday I'm writing it down. Same thing, copy, paste, but you're writing it because there's something psychologically about pen to paper. Don't ask me what it is. You can type it up, but it's not going to effectively work into your brain the same way it does when you actually write it.
Mm-hmm.
Every morning when I get up, I have to write down, again, it's all here, what are my 3 goals? And what am I going to do today, the minimum thing that I'm going to do today to achieve that goal? And what is an obstacle that could stop me from achieving that goal? And how am I going to work around that? So what my point is it's top of mind. First thing in the day, I'm already thinking about that. And I'm like going, okay, well, shit, I wrote it here. I already wrote it. So now I got to follow this thing through for 90 days. And so it's a different way to do it because it's constantly you're taking action on that goal every day. It's not like, yeah, January 1, I want to be $4 million and I want this, I want that. Let me check this December 31st and see how I did.
Yeah.
This is every day, man. So it's like, it's intentional. I mean, you got to commit to it, you know, and it's some self-doubt. Sometimes you're like, shit, I should have written that, man. That's pretty intense. But you got to, you know, again, it's one of those things. If people tell me I can't do it, then I probably won't.
Mm-hmm.
If I don't listen to anyone and I just do it on my own quietly and I'm just moving along, you'd be surprised what you can accomplish.
Yeah, for sure. And yeah, like I said, if you don't take steps every day before, you know, it's like a vicious cycle, you know, and then you get depressed, and you get down on yourself, and you start feeling bad, and then you don't want to do anything else, and then you don't work out, and you don't eat good, all these things add up, and then all of a sudden 10 years goes by and you're still not where you wanted to be. So, okay, cool. That's all excellent information. So you guys end up building up your company over 7 years. You get it up to, you know, 1,000 units or more. Then kind of what was the next steps? Because I know you had a big transition here recently, and that's why you're the vice president at Mynd.
We were approached by a property management company, a rather large one out of California, out of the Bay Area, called Mynd Property Management, MYND. And they manage about 10,000 properties, and they're on an aggressive growth strategy. And what we liked about them is, you know, they started talking about us, you know, doing some kind of merger together. And what we liked about them the most is they respected what we did as a company and what we built.
Mm-hmm.
And they wanted to utilize kind of our brain and our strategy to integrate certain things into what they're doing on a bigger scale. So they're very much like, hey, we don't know everything. You guys have built a successful business. We want to take some of your brain trust of what you've done and let's roll this bigger. Now, the 2 gentlemen that created Mynd Property Management, Doug Bryan and Colin Wheel, they had owned a company prior to this called Waypoint Homes. And Waypoint Homes went up, they owned 17,000 properties and ended up selling and going public.
Holy
so
moly.
These guys know what it's like to be an investor. They get it, right?
Yeah.
On a much bigger scale than I could ever fathom, right?
Yeah.
They think a lot bigger, right? If somebody would have told them, which I many times told them they were crazy, what are they doing, blah, 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 they had a strategy. And so they want to build it from an investor's perspective. That's their goal, is build it from an investor's perspective and also be respectful of residents and build this, because this, I think, and I think they feel the same way, is this industry of property management is very much like the taxi industry was before Uber, right? Before radio was before XM radio. There's a lot of friction in this industry. They pretty much feel that they are more of a technology company that is going to provide technology to solve a lot of these challenges in this realm. Because when you think of a property management company, you know, a lot of people come to mind of this, you know, an old lady smoking a cigarette with coffee stains on your lease agreement, not answering the phone. That's not necessarily the case, but that's the persona that a lot of people have, that management companies don't care. That's not true. They just don't have very effective systems to be successful.
Mm-hmm.
Just like taxi cabs, just like anything.
Yeah.
The industry is changing. It's going through a change of state right now. And so when they came to us and said, look, we want to bring you guys on and purchase your company, bring you guys on to help grow this thing. And we're like, okay, like let's do this. And so, went through iterations and ended up selling our company and joining Mynd, which is where I am now. And so I'm in charge of investor education, essentially. We have a team of marketing and investor, and my goal is basically to go out and organically help investors understand what property management does, why it's important, and why it's a part of the piece of the puzzle. It's not its own entity, it's a piece of a bigger puzzle for investors to understand how to successfully grow their portfolios by using the team concept, not trying to do it on their own. And that's kind of what my role is with them.
Sweet. No, that's awesome. Well, congratulations on that. That's a awesome next step in your process. And, that kind of leads to the next little question is, so where is Steve going in the future? What's your goals and everything that you're working towards right now? What's the next steps for you?
Man, that's a $1 million question. I don't know. I'm very happy with Mynd. I really like what they're doing. They're looking to excel. They're giving me the lateral to do what I want to do with my influence. I'm doing a lot of stuff with Bigger Pockets. Like I said, I'm doing some collaboration with them, all pushing back to Mynd, just trying to educate the industry. I think there's a big void for whatever reason, like it, love it, or leave it. I have the ability to help influence and explain to people a different way because I think I am an investor. I walk that walk. I still buy properties, but I also understand the business side and property management. I'm able to kind of meld them together so I can talk to investors on the investor level, but I can also explain why there's certain things that are necessary. So my goal is to just keep doing what I'm doing, keep trying to educate the industry, podcasts like this. My thing is when I was learning to do this and we made all the mistakes we did, there was no one really there to help me. And I think it's a big void. And I tell people that, if somebody would have told me, hey, Steve, what are you doing? Why are you buying these properties? Why are you making these decisions? That does not align with your goals. Maybe I wouldn't have made the same decisions. Now, I think I'm very successful because of the mistakes and I learned from those. But the one thing I've learned, in my opinion, and you could say I'm wrong, I don't know. Hopefully you don't, but
no, I don't think so.
I think as entrepreneurs, and I say this very, very not lightly, but I think we can be very selfish. And what I mean by that is anyone who's watching this, we want to focus, we want to educate, right? We listen to audios, we go to seminars, we watch these kind of shows, right? But how many people actually pass that down to their family and to their children to create legacies? And that's what I mean by being selfish. We're so focused on us being successful, we lose sight of the other people that are trailing behind us. And when I was buying properties, I was not in alignment with my wife. I mean, there was a lot of tension buying wrong properties. And you and I talked about this prior. It's not fun. When you think you're doing the right thing and you're focused and your wife's like, what are you doing? Like, I thought this was a hobby. Like, this is not, and you're kind of trying to do something, and that carries on. So what I try to impart on people is, when you're learning these things, bring your significant other into the conversation. Bring your children into the conversation if you have them. Get them involved. Don't think they're too young. My son, 14 years old, bought his own rental property, and he came to me and was like, Dad, I want to own a rental property. And I was like, what are you talking about? And I had a big conversation with Brandon Turner on Bigger Pockets on a podcast show about this, because it's like, how do you, everyone asks me, how did he buy a house? How did he get a loan? How did he do this? I said, you're asking the wrong questions. What you should be asking is why did he want to own a rental property? What was his why?
Yeah.
Because once you know the why, you can create the how. You can get it there.
Yeah.
Why he wanted to do that and go through the process is the bigger question. I didn't know it at the time, but he was listening to these podcast shows that I was listening to, Grant Cardone, Andy Frisell. He's listening because he's in the car with me, right?
Yeah.
Part of his chores is he had to listen to Grant Cardone, 100 Ways to Stay Motivated, every day. He had to listen to this. I made it part of his chores, and he did. And he started thinking a little bit differently. And so I realized I was one of those people that I'm like, man, my son is like a sponge, and I'm not giving him that opportunity. That's pretty selfish of me. Like, I've got all this, I spent hundreds of thousands of dollars. I've invested hundreds of thousands of dollars in educating myself, and I've spent zero on my son.
Mm-hmm.
So is that to me is selfish, in my opinion, on me. So I changed that. So again, it's just something that I would say that I have learned that that's where I'm going. If I can help educate people more, that's what I would like to do.
That's awesome. No, that's awesome. I love that you mentioned Andy Frisella and Grant Cardone and all those guys, because I'm a huge advocate of those. And some of these things I'm going to implement with my son. I've already done some of those things, but I'm going to definitely implement more. So what is we touched on a little bit, but I want to know, like, if you had to pick one type of resource to go after that would really accelerate your business or let you learn about things that you're insufficient about, whether it be books, podcasts, mentor, coaches, anything like that, what would you say is like the key resource to learn?
Man, I am a huge Audible fan. I would say. I mean, you have billionaires speaking at you. When I'm in the gym, it's on. When I'm in my car, it's on. Man, I am a sponge on any kind of education. And the thing about Audible is it doesn't just have to be business. You can listen to other books and other education, and you can go back and re-listen to them. And if you're not doing that, man, you're getting a college degree, you're getting a master's degree by people that have done it. So I would say Audible by far is the best $14 a month or whatever it is I spend on that, without a doubt.
Yeah. Okay, cool. Right on. What about a favorite app or piece of technology that you use, like in your business, or, I mean, maybe it's just the Mind software or something like that. What is it that you recommend?
Actually, I'm a big fan of Asana. I don't know if you're familiar with Asana.
Yeah.
Yeah, it's like a workflow project. I'm not a workflow guy. I use it, but you're able to basically put things that need to be done and task them out to other people. And you can attach Google Docs to it and other things. It's just a way to be organized. And like for you, you've got multiple projects that you do with your businesses. You can have different projects going with your businesses and things that you've got to do, and you can assign them to other people. So you can look at things from a bird's eye perspective and still understand what's going on. And again, I probably scratched the surface of what Asana could do. My buddy Tarl Yarber up in I was doing an event up with him in Seattle, and he's like a Asana certified guy. And so he was showing me stuff that it did, and I was like, "Are you kidding me, man? I didn't know it did this." And he's like, "Oh, that's not even happening." I was like, just blown away by it. So Asana by far is something that I would recommend.
Okay, right on. Well, I know you and like me are both like into fitness, and you think that's a key foundation of your success. Would that be like, I usually ask what a mindset set tip is, but what would your mindset tip be to like keep yourself motivated and healthy and happy and moving forward in life?
That's a good question. I am a big believer in intentional focus. Like, I hate hearing people's excuses. I hate it, man. I just, when someone tells me they can't do, like, they'll ask me, like you and I were talking about this earlier, like, I get up at 4 a.m. and I go to the gym, right? Why? Because I got shit to do during the day, right? And I'm not going to not go to the gym. So people are like, man, how do you work out? Like, how do you do this? I'm like, I get up and I go. They're like, oh, I could never do that. I'm like, and you never will. You know why? Because you're already quitting. Like, and at the end of the day, I don't care if you quit. Like, I don't care. Like, I have my life, I have my problems. I will help you. But as soon as you tell me you can't do something, you choose not to. So don't make excuses. Be focused on what you want and go after it. It kills me. Like I said, I tell people, I am an airline pilot. I still fly for the airlines, right? I created a company. I built it up. I sold it. I speak all over the country and all over the world on stages. I wrote a book. People are like, how do you do it? I'm like, because I'm focused, man. That is why I do not give in, and I do not accept the fact that I can't do something if I'm focused at it. So if you ask me, man, just laser focus. And I have a hard time with that. I have shiny object syndrome where people offer me, hey, do you want to come speak here? Do you want to do this? I have a virtual assistant who's my assistant, and she's my bumpers. She's the one who keeps me in line. And so if I'm like, hey, they want me to come speak here, she'll be like, is that part of your goal? Like, because I tell her, I say, look, you got to keep me in line. Like, because I get a lot of offers and this and that. You got to tell me, like, should I or shouldn't I? But having that focus and that drive to your North Star, to what your goals are, to me, that's it.
Yeah, for sure. No, it drives me so crazy also. I'm the same way as you. If somebody tells me, I don't care if you don't really want to be successful or you don't want to keep climbing the ladder. I'm fine if you're happy and content with where you are.
Absolutely.
But as soon as you start complaining about it, and you're not taking action to change it, don't talk to me anymore. You know what I mean? Because it just like drives me crazy. Like
I lose respect. Like I tell them, I go, you know what? Unfortunately, I've lost a lot of respect for you when you tell me that. Like, I'm like,
yeah.
I'm not gonna say it's okay, because it's not okay. Like, don't expect me to be like, oh, it's okay. I understand. You've got a job. No, it's not okay. You know, don't watch 25 minutes of TV and go run sprints. I mean, I don't care what you do. You know, read a book, do something.
Yeah.
Don't tell me you can't do it, because that doesn't work with me. Like, that just doesn't fly.
Yeah, for sure. Right on. So where can people find out more about Steve, Mynd Property, your book, everything else about that?
Sure. Yeah, they can go to the Mynd website is MYND. So it's Mynd, MYND.co. So it's not com.co. I have a Facebook group. If they want to join, they're welcome to join. It's the Mastermind, MYND, Mastermind Real Estate Investment Club. And there it's just fellow investors. There's people from Bigger Pockets, other people on here from all over the country, talking about what's going on. You know, Mynd puts deals in there that come like kind of hot off the press, like people all over the country, different properties with the breakdown, so they can get deals before they hit the market. And again, I think it's a good place for investors to learn and educate themselves. They can also follow me on Instagram. It's Rozenberg Steve, Rozenberg Steve. If they want to see videos and pictures of me flying around the world, I post a lot of stuff there along with other educational stuff. And then they can find me on Facebook. It's Steven Rozenberg. They can find me there. So if you Google me, I'll probably come up in a few searches. But yeah, I love talking to people. I'm very accessible. You know, people send me messages all the time. You know, you and I talked. You know, that's how we met.
Yeah.
All the time, people reach out to me and they're like, it's funny. They're so shocked when I respond. They're like, man, I can't believe you responded. I'm like, yeah, that's what you do, man. That's respectful. Somebody reaches out to you, you respond to them. You know, I mean, that's just how it is.
Yeah.
I guess it's just a different way of thinking. I don't know, but I'm very accessible. If people want to reach out to me, ask me questions, I'm sure I could point them in the right direction or help them out. Glad to help out. And I do thank you for giving me the opportunity to be on the show. I love watching the guests you've had, and I definitely going to be an awesome run that you have on this.
For sure. No, thanks. And again, his book is Building an Empire, Failing Our Way to Millions. So go out and get that. And again, Steve, thanks for being here. Maybe I'll have you back in the future and dive more into your rental property, but this is awesome little education. So reach out to Steve. Thanks, man. You have a great afternoon.
Thank you. Take care.